Good afternoon, everyone. I'm really excited to be here today. Uh, Everyone always wants to talk about trade and tariffs, and to get to do it with energy leaders is even better. So, you are in for a good discussion, I think a very timely one. Um, we talk a lot about trade and tariffs because, of course, they're ever present in every single comment that comes from our president's mouth, although perhaps second is his interest in energy dominance. So, these things really do go together. Um, but one thing I'm struck by, of course, is that President Trump, in his continuation, in his diatribes, sometimes talks about tariffs and policies in a way that don't exactly engender stability. And I think probably the one continuing theme here is how critically important stability is, not only for frankly all business, but certainly for the types of businesses which require long-term planning, long-term capital, and customers over the long time term. And I think probably one thing you'll hear from our distinguished panel, not only is an interest, I think, in fulfilling some of the president's vision around energy dominance and in supporting the infrastructure here in the United States, but possibly also just a continuing need for stability that provides these types of firms and their customers to have a long-term vision for how this will all look. So let me tell you about our panel here. Bob Lee, President of North America for LG Energy Solutions, the most significant battery manufacturer operating in the United States, with a major and growing North American manufacturing footprint. Before joining LG, Bob managed several startup companies, including as president of Paltech.com, director of Lucent New Ventures, and as founder and CEO of Zing.com. Bob has over 10 years of experience in startup management and business development. He's based in Detroit and has a particular, I think, knowledge base not only about batteries, but about the auto industry, which I think is really interesting in the context of our discussion today, and we'll get to that. Baden Firth, Senior Vice President and Head of Mitsubishi Corporation in DC, representing one of Japan's most important global industrial players with interests across energy, materials, power, infrastructure, and critical minerals. Baden has worked at Mitsubishi's Tokyo office as well as their Melbourne office, where he has been responsible for external affairs engagement with Australian federal and state governments. Baden has over 20 years of experience in global and corporate strategy and government affairs. And finally, Edward Burrier is Director for Public Policy at TC Energy, a Canadian energy company that greatly supports North American energy security through its natural gas pipeline network and infrastructure investments. Prior to working at TC Energy, Edward worked at the U.S. International Development Finance Corporation, where he held the roles of Chief Operating Officer, Vice President of the Office of External Affairs, and Executive Vice President. Edward has over 2 decades of experience in foreign investment, information and communications technology, and emerging markets. We're going to ask you to talk a little bit about your experience and how you've seen some of this evolution. I think you are perfectly positioned to tell us about that. Um, but first of all, I wanted to just get everyone's perspective about the current situation we find ourselves in. President Trump talks a lot about the US being the hottest market for inward investment, and the numbers he posts do seem to support that perspective. We do see lots and lots of foreign investors. I'm pleased all three of you represent some foreign interests here, so you can speak about that from a foreign perspective. But how does the environment and the uncertainty I spoke about at the beginning with the tariffs, the IEEPA tariffs, and the 122 tariffs, and the 301 and the 232, how does that all impact your thinking as you approach the United States as a place for your investment dollars? Baden, I'll start with you.
Well, thank you very much. It's a pleasure to be here. I don't know that I'm completely qualified to talk in detail about that, but given my Australian background, but I can tell you my 3 years here in DC has been a pretty wild ride. Um, and our company, as you mentioned, invests in critical minerals, invests in gas, energy, infrastructure. The bottom line is really quite simple, and it's the same, honestly, in Australia. The You have to look beyond the noise. We're investing in projects that are with time, investment horizons of decades, and whereas a lot of the noise, the policy movements that you see, are typically a lot less in impact in terms of those time horizons. So, we think about, we like to take a deep breath whenever we hear certain movements, and sit back and look at things into the longer term. Um, Now, the tariffs, lucky for us, we're prominently, our business here in the United States is almost entirely an export business. So we like to think of ourselves as obviously a foreign investor, although our major shareholder is Berkshire Hathaway, so that's also up for question. But we like to think of ourselves as local players, and we're supporting the U.S. Uh, trade deficit in as far as exporting. That's agriculture, that's energy, and several other areas. And so, we weren't directly impacted by the tariff movements. But that said, it's obvious that that's had some impact on the cost of doing, and we have of doing business and building infrastructure. So we have to take that into account. It also impacts obviously our customers as well, and so the indirect impacts of those trade movements, trade policy changes, uh, we just have to take them in our stride. I don't think that we've seen the end of this period, and I think that there's a lot of reason for taking these actions on the side of the U.S. government. It's clear that something had to be done, and there's a lot of different ways to do it. But ultimately, we've ended up in a place where I think slowly but surely the dust settles, and as I said, as we step back and just take a deep breath and wait for that dust to settle, it's not going to be so bad.
That's a good perspective. And maybe before you go, Bob, I would also, I think it's fair to also address the fact that the Trump administration, while the tariff landscape can appear bumpy and a bit unpredictable, has also been taking steps to facilitate investment, whether it's through regulatory reform, obviously some of the tax code, which was finalized earlier in the presidency. These are all steps intended to make the U.S. attractive, to deal with red tape, to create, as they say, white glove service for investors willing to commit. So, so as part of that picture, perhaps layering that in, I think to Baden's point that maybe it settles at the end. Again, how do you see
Yeah,
the U.S.?
yeah, I mean, I want to introduce LG Energy Solution a little bit. We're the largest lithium-ion battery manufacturing company globally outside of China. Um, we have 8 plants in North America, 7 in the US, and 1 in Canada. Each of these plants are about $5 billion in investment. So we've made with our partners about $40 billion of investment over the last 5 years. I think we're probably one of the most largest foreign direct investors over that period. I think what's important to note is, we started production in US about 15 years ago, but we announced our um, projects during the first Trump administration, right? So a lot of the announcements, original announcements, were with General Motors, Ultium joint venture, where we had 3 battery plants. We continued to make that investment during the Biden administration, and we continue to make that investment through the Trump administration. So I would say that we are committed to building in the US, and we're totally on board in terms of manufacturing batteries in the US for the US economy. So full stop there. I would say just on the tariff side, it does impact us significantly, and there are probably a couple of things I would talk about. So one is in the auto industry. A lot of our products go into EVs, and as you all know, in the auto industry, the supply chain is very complex. There are a lot of products that go back and forth through Canada and Mexico. And I was in the auto industry prior to joining LG, so I'm familiar with how the economics work. I think right now, USMCA is really critical for the auto industry to stay competitive. So while there hasn't been any explicit changes, I think there's a little bit of anxiety around it, and that's something that we need to try to monitor and react to. And the other thing I would say is, like we said, we believe in manufacturing in the U.S. and we've invested here, but we also need a situation where you can manufacture in the U.S. competitively, right? So just as an example, if you're building automobiles in the U.S. and all of the components that are coming in are heavily tariffed, then it's very difficult to build vehicles competitively, even though that's the intent of the policy. So in our case, there are still certain materials and raw materials that are not available here in the US. We're working very hard to build that value chain, but while we're building that value chain, in order for us to be competitive, some of the tariffs increase cost for us. So I think basically we would just request that that be done with a scalpel, right? So that we nurture the industries that we're trying to grow since we invested here and we're committed to building here. But sometimes, the way it's been applied, I think could be a little bit finer.
Perfect. I'm going to come back to you on that, actually. Edward, I referenced your experience. You've been watching these sorts of investments both from inside and outside the government. What can you tell us about your perspective of the evolving nature and how a company like yours looks at it?
Yeah. Well, first of all, congratulations to the Atlanta Council on a fabulous 2 days and another great global energy forum. As you mentioned, TC Energy, we're natural gas pipelines across Canada, the United States, and Mexico, and all told, move about 30% of the natural gas across the continent, connect to LNG facilities in all three countries, including LNG Canada, which Mitsubishi's a part owner of. And I think a theme over the past day or so here at the conference has been how the United States has evolved and become the number one exporter of oil and gas. And that's really helped the market stabilize and make it through the past couple of months. But if you step back, it's important to kind of complete the sentence there that the reason the United States is able to do that is because of the connectedness between the three countries. The amount of energy coming from Canada into the United States, we used to talk about the amount of gas coming from Russia into Europe through Nord Stream. The equivalent's coming every day from Canada into the United States as far as natural gas is concerned. And then obviously the oil as well. There's more energy moving across that border than any in the world. Mexico, it's about to have a LNG facility on its west coast start shipping. That's a straight shot to Asia, which is so desperately needs it. That's actually gas coming from the United States. That's Texas and New Mexico gas that's going to ship through. So this interconnectedness has really, which is tariff-free, has allowed the United States, it's enabled so many things, but it's included this ability for the United States to export. And then just on tariffs and as Baden was kind of mentioning, as the dust settles, um, it is interesting when you look at a lot of our assets are right down the center of the country. And there's some data out there. If you look at the freight data, it used to be we'd have a lot coming in from the ports on both coasts and then going into the country. But actually, if you look right now, there's so much going on in the center of the country that there's just indicating of so much economic movement. A lot of that's data center developments, but it is manufacturing and other things. And of course, that really benefits us because we're going to need natural gas to move all of that, power that manufacturing along. So that's part of what we're seeing and very encouraged by.
Yeah, it's a great point. And as a former U.S. trade negotiator that served in the U.S. Western Hemisphere negotiating team, I've watched the evolution and obviously a lot of rhetorical unpleasantness sometimes between the North American leaders. But the reality is, as you point out, we've had duty-free treatment. Canada and Mexico have enjoyed the best access to the United States, and that's obviously not done as a favor. It's done because we need energy from Canada. We need certain things from Mexico, food and vegetables. Um, but the energy is the through line, in my opinion. It is probably what will keep us where we need to be on USMCA. We were talking in the green room about the president's comments earlier today that he's not interested in renewing USMCA. He says this often. Um, but, as you were mentioning, cutting through the noise, sometimes you cut through the noise and you look at the reality, which is, again, that the USMCA relationship remains very critical to the US economy in the heartland, that manufacturing, but also across the coast for our data and tech centers. We need electricity. Um, how do you, as players in the energy market think about the energy mix and what the president sometimes says about renewables against the backdrop of rising energy costs, particularly for residential consumers. Um, Bob, I know you represent some of the renewable sector, but no, just the batteries.
Oh, no, for us, we're source independent. So, we support a lot of projects that are gas power generators. I mean, nuclear is coming online. So, energy storage systems can be used for renewables, but for other power sources as well to modulate between actual supply and demand. So, I think that's really the value proposition that we're able to support the demand necessary with, in a sense, less capital investment by using the batteries to bridge that gap. So, for us, we're very encouraged by all of the investment happening, and yeah. So I mean, I would say we're agnostic in terms of what type of power is coming online. One last thing I would say is if you look at amount of power generation between U.S. and China, 25 years ago, we used to generate 3 times as much power as China, right? Right now, China is generating 2 times more than us. That means within that 25-year period, they increased their output 6x. We increased our output by like 15%. So I think the story is really around upgrading our power capability, upgrading our grid, and I think what type of source you use is kind of the secondary issue. We just need to upgrade our power for energy security.
What maybe to that point, if you were in charge, because it's clear we need to update our grid, we need to update our power supply for all the reasons we mentioned, notably to support the president's vision for reshoring all of these critical sectors, for increasing our data centers and AI technology capabilities. Some tariffs, of course, go against those goals. I think, thinking about how to apply a scalpel rather than a sledgehammer is important. And I would say we are seeing signals within the Trump administration to increase exceptions for goods we don't produce or that are critical to manufacturing. I assume you are all in discussions as investors in the United States with the Commerce Department and the Trump administration around the needs for increasing these investments and the supply. How do you gauge the receptiveness? I mean, do you see this change as some of us do in the metals, derivatives, and all the rest of it, or do you still see major obstacles to overcome?
Well, maybe I could pick up on your earlier question first about the USMCA comments, and I think that one thing we tend to in the modern news cycle get consumed by is this idea that we hang on to every word, and the reality is that that's a negotiation, and so we can't, whether it's Iran, whether it's USMCA, to assume that we can see and know what's actually happening there in those important negotiations and discussions is really a fool's errand. And I believe that things will get resolved as they always do. Now, the key here is you touched on affordable energy. Um, the I'm a big fan of the Capitals. I've only been in Washington for 3 years, but I love hockey, and I've been to I've got season tickets at the Capital One Arena, and there's a point in the game every time they people stand on their feet and yell out, "Unleash the fury," right? And I think that to me resonates in this case where it's the government's job to clear the path, but it's really the private sector that can build the road, and that's what if you can just let the private sector unleash that immense power, and there's no country on earth that has more ability and more power to let the private sector go and do what's needed and provide that affordable energy for Americans. And by extension, in fact, when you think about energy, obviously as a national security question, which it obviously is, it's let's say it's national in purpose, but it's actually international, but in execution. You have to think of it as part of an international ecosystem, right? And the United States is in a perfect position to take advantage of both aspects of that. And so my I guess one and only message here is to yeah, clear the path and let business roar.
Speaking of Braden's comment on clearing the path, one thing my CEO likes to mention is that for the first time for us, the leadership in all three countries, as a matter of public policy, are seeking investment in energy infrastructure. That's the first time we've had that in a very long time. And uh, there's going to be, again, we were talking about Strait of Hormuz at the conference, a wave of investment coming to the Western Hemisphere. From Alberta to Argentina, there are energy resources to be invested in and utilized, and that really creates competition amongst these countries for where that capital is going to go, and it's going to go where it's most welcomed. Actually, there were some Canadian colleagues here yesterday, and they were kind of surprised that U.S. policymakers were saying it's slow in the U.S. I said, "Oh my gosh, it's horrible in the U.S." They think things are fast in the U.S.
From a regulatory
Yeah, exactly. So we're going to have a competition amongst all three countries for this capital, and so, but they realize that they've got to clear the path. Oftentimes, political will's the hardest part. It's not the technology or anything else. It's actually the political will, and so I think we'll see folks coming together.
So I'm going to make this panel interesting because I'm going to completely disagree with my panelists. I think United States economy, no doubt, entrepreneurialism has been our strength, right? And we've built Google, we've built Apple, we've built a lot of high-tech companies, software companies, and the venture model works, no question about it. We lead the world in this. But I think what is not working for us is long-term capital-intensive industries that are fundamental. So I'm talking about batteries, I'm talking about solar cells, I'm talking about displays, I'm talking about semiconductors. These require 10, 20-year payback periods. And it's provable that in the US, we haven't led in these industries, right? These are being led by China, Korea, and Japan. And I think the reason they are doing this is because they have 5-year plans, 10-year plans, which is a comprehensive cooperative plan between business and government in order to figure out how they're gonna win in certain industries. We as a country has been so strong and so powerful. We never needed this, right? We've been very successful in the post-war years, but again, as we get into these capital-intensive industries, things like AI, I believe we need to plan and work together and be very smart, because if we're just allowing random actors to do their thing, I can't see how we're going to win in that space compared to some of these guys who are really planning this in a much more cohesive way.
Bob, one thing just to riff on what you said, um, Kate and I worked on Capitol Hill a long time ago when things that are happening today, as far as the U.S. government involvement in private industry, would have been unthinkable. Uh, Her old boss would have never gone for it. My old boss would have never gone for it. But um, Kate mentioned I worked at the Development Finance Corporation, which finances things in the developing world, and it used to be criticized by the right and the left. Now, all those things about government involvement are out the window. No, everyone's for, the U.S. government's doing critical mineral projects. They are doing guaranteed price, long-term financing, equity stakes, floor prices, all on the same company. And so, at least, so I think people are getting past it, and there's not really partisan pushback to that. I foresee kind of a recognition that in certain industries that the government needs to do it, because they realize that China's playing this game. Anytime there's like a lithium mine in Idaho that the Chinese just flooded the market, and the mine got canceled several years ago. So, anyways, that's I think the good news is that some things are changing.
I think that's right. I mean, but it's also, we're still a democracy. I mean, it's very clear there are fewer free market Republicans than existed when we were in the Senate, even since the first Trump administration. But again, as we've seen, even over the past couple administrations, things change very quickly. And we can all have agreement, perhaps, that the United States needs to more comprehensively identify and invest in sectors of critical interest. I mean, critical minerals are clearly really what we're looking at fundamentally. It's why we don't have a rare earths industry, not because we can't make it, but because it didn't make sense from a market-based perspective. So you have to create these plans. Um, but it's not that far to imagine that a different president, a different party might take more equity stakes. And are you all comfortable with that?
No, I mean, I'm not comfortable with companies taking equity stakes. I think, the examples that I would talk about is Japan or Korea, not always China. These are democracies that plan their economy. So I think it's possible to do within a democracy. And it's really sometimes the government may involve investing or providing grants or taking equity positions. Sometimes it might be providing research support. Sometimes it might be regulation. So it's a multifaceted, I think, policy to try to support an industry. And by the way, I'm a free market globalist. I mean, I would only want the government to do this for few handful of topics, right? I mean, things that we really want our kids to be, right, leading in the world. I'm not talking about, government being involved in every little thing. I'm just talking about a few really critical things that we know is going to be important 30, 40, 50 years down the road. And that's what we should try to win.
Yeah, if I could just pick up on
Please,
that,
ma'am.
I think that we're living in such a unique time in the history of energy that we expect things to move really quickly, but obviously in this game they just simply don't. And yet we've got this demand that came out of nowhere in AI, and the AI story is really an energy story, and industry is trying to catch up and take advantage of that boom. At the same time, we're only 10 years into to your point of the US being an energy exporter, net exporter, which is a wonderful convergence of quite completely unrelated um, developments, and so it's important that the government gets this right. Um, and while I say clear the path, I think I'm talking specifically on energy. They have the ability uh, to do what is necessary to make sure that the AI development is controlled, and the security of the country is first and foremost, and its people. But ultimately, there's a huge opportunity here to make sure that you combine those two uh, historic developments of AI and energy abundance to take full advantage and ensure that it's actually the US and its allies that are winning this race.
One interesting observation, maybe to your point and your point, Baden. We often talked about the US and the Western market based economies trying to change Chinese behavior through the WTO. But it really was the China 2025 plan, I think, which has fundamentally shifted the way that the rest of us have looked at exactly the issues you're pointing out. How do we take back some of, not take back, but how do we ensure our own access and ability in critical sectors? You mentioned Japan and Korea, which is, of course, very interesting because, as part of the trade frameworks that the Trump administration has struck, are commitments to invest in certain critical sectors. And of course, as you mentioned, but it's obvious, the Koreans and Japanese have led in some of the very sectors that have been identified by the Trump administration as critical to our national interest, not only energy, nuclear, but shipbuilding, semiconductors. Um, how do you see that partnership going? I mean, is this an opportunity for us to work with allies to ensure that we are able to compete against China in the future?
I hope so. I mean, I think the intent is there, clearly. I mean, I'm a U.S. citizen, but I know that our company works within, you know, what we would consider as the right human rights regime and in a democratic regime, very supportive of the United States. So I think it's the type of, companies or, countries you want to partner with. I do think, yeah, as we evolve in these critical industries, we do have to work with some of our close partners, and I think, Korea is one of them. And I think from, Korea's point of view, I mean, they look to US as the most important partner. So I mean, whether it's capital investment or technology transfer, I think I know that Korea is very, very committed to making sure that it partners well with U.S. growth requests.
Yeah, I think one other observation about the relationship with Japan and Korea and the investments that they're making is um, I've heard from some U.S. officials about how the Japanese have been very encouraged about linking themselves closer to the U.S. market. They recognize that they can only grow so fast within their own market, and that by having a greater exposure to the U.S. market, that actually is going to help them grow faster, scale bigger, larger, and the technology can advance that quicker. So that's really encouraging.
So, with our few minutes left, again, we are still a democracy. We do still have changes. We will have a new president in a couple of years. Um, we talked backstage about sometimes how things have gone wrong and have changed, and how does that impact business. We talked about the restrictions on export of LNG. Obviously, the change in approach on renewables, electric cars, I mean, which was obviously also an experiment in working on tariffs and industrial policy together. What advice would you give policymakers or the next president? What should they keep from this administration? Of course, we're not quite 2 years in yet, but what policies should they retain, and what should they do more of, or perhaps change completely?
If I could point to Australia as an example of perhaps what not to do, uh, it's we've enjoyed a long history of investing in Australia, and it's been a wonderful story. But increasingly, it's becoming more and more difficult to get new projects to stack up for various reasons. But essentially, that the economy is so dependent on the income that comes out of that they keep going after it as times become harder. And I think you have, in order to have a vibrant energy ecosystem, both domestic and export, the US is in a perfect position to take advantage of that because it's such a young industry now, that we have the opportunity to get it right. And I think for the most part, honestly, it is. If you see the speed at which developments are happening, the vibrance, it's truly incredible, and I commend the country on that. As an Australian, it's refreshing, frankly. But the pause, the LNG terminal pause we saw a couple of years back, that came as quite a surprise, out of nowhere. And if I could encourage one thing, it would be perhaps not to do that again. Or anything similar. But jokes aside, I think that's an example of where things can go in the wrong direction for political reasons, without the consideration of affordable energy for the U.S., vibrancy in the economy, and of course support for the trade deficit. All of those things are positive.
I think we need more energy across the board for everything. There was a panelist this morning who made the observation that every innovation known to man has required more energy. And we are innovating so fast. It took, I think, 27 years for the personal computer to reach a billion people. It took AI 2 years to reach a billion people. So it's really, really moving fast. And one thing that the Trump administration has really been doing well is the quickest way to get more energy is to maximize your assets that are already in the ground. And they've been updating some of the rules that you have that were written decades ago about when you do upgrades to your existing facilities, so that they recognize that they are routine rather than going through a full process. So I think that's really encouraging. That's being done on a bipartisan basis at some of the regulators. And so that's something that we can all do to get the most out of our system.
I really like that word bipartisan. I think you know, if we have an industrial policy where it is bipartisan so that there is stability and consistency from administration to administration, I think it would do a tremendous good for business productivity, more investment, and more robust growth. So I think, you know, there, I think the goals for most people are, probably aligned, right? We want manufacturing in the U.S. We want good jobs in the U.S. We want self-reliance. So I think those are things that we're all targeting. And then I think we have to find areas where there's enough middle ground that it is bipartisan, because it makes I think the business community very nervous right now, the fact that we've gone back and forth over the last couple of administrations. So I would ask for, yeah, bipartisan solutions where we really have kind of trust on the policies that are being established.
Here, here. Um, I want to thank all of you for this really optimistic, I thought. I'm struck by the optimism more than anything else that you're committed to the United States. I think that speaks really highly to the vision going forward. And I think if I had to conclude with some sort of cohesive answer, it would be that we need to set a vision. Obviously, policymakers need to set a vision and stick to it, but really trust the private sector and unleash the fury. Is that what you said? Unleash the fury because
Let's go
clearly,
Caps.
clearly though, I think again the commitment to innovating and delivering is there. Um, sometimes the policymakers need to get out of the way. I do agree on that, but it does seem we're on a pathway there. We just need some stability. Thank you.
Thank you.